Hello and welcome everybody. Welcome back to Sectors Made Simple and welcome to the release of the S&P 500 screener. This is an exciting tool that we've been working months to be able to produce for you all. Over the past month, we've had the opportunity to work with Sectors Made Simple subscribers to make this tool the best it could be for them. So I hope that it will be the best it can be for you as well. I'm going to get the big stuff out in front here. If you're watching this webinar, you have no idea what Sectors Made Simple is, you have no idea what point and figure is, don't worry. Today, I'm going to explain what this tool is, and I'm going to explain how this tool can be used by 3 different people, we'll call them, of different skill levels. And one of them includes someone that doesn't know anything about point and figure and is just starting off investing. Whether that's you or not, I hope that at least one of these 3 personas clicks with you. It resonates with you, and the way that this screener can help you invest makes sense. The goal of this tool is that it's quick and easy to pick up. The value is really whatever you're trying to do. The value should be that this makes your job faster, easier, and more streamlined overall. So again, whether you know point and figure or not, this tool is something that can benefit new and seasoned investors alike. So I encourage you to stick around, learn more about this tool, and learn how Sectors Made Simple helps everyone to invest simpler. Now that the introduction is out of the way, I'm going to just stop talking directly to the camera, and I want to talk about the presentation that I prepared for you all to introduce this tool. And yes, of course, we're going to go actually take a look at the tool and explore it in a little bit of detail. So let's get straight into the action, shall we? So, disclaimer for this webinar, I will talk a little bit today about strategies. Whenever I mention strategies, trading strategies, or returns, these are based on historical performance. I will not try and pretend that these numbers are fake, or I'm not going to try and tell you something that it's not. My job here is not to sell you something. My job today is to show you a way that information can be used. I want that to be not the results be the point. I want the process to be the point. So please take everything I share today as educational resources of ways that this tool can be used, not as, oh, if I use this tool, I'll make 20% return. We can't guarantee that. What we can guarantee is that this tool is extremely useful. You will find use out of it, and it will save you time and also probably money. I'll get to that later though. For right now, I want to talk about the goals that I want to cover in today's webinar. First and foremost, it's a little bit of a release party, all right? We released the S&P 500 screener today. If you are already a Sectors Made Simple subscriber, head on over to dash.sectorsmadesimple.com. You can go and explore the tool for yourself and follow along with me today as you get to explore how the tool can be used. Also, I feel like I need to come, this way a little bit. Okay, there we go. The point of this tool is to bring new insight and information to investors of all skill levels. While I can't say we're the only person to do this, what I can say is that we are one of the few that have been able to create a process so streamlined that we can build something like the S&P 500 screener. This is not just we took new information that others have used. We took tried and true methods and applied it to a data set that is larger than anyone that we have found doing something of this scale. So that is what I can tell you. In today's webinar, I want to talk about the basics of what this screener is, how it works, and yes, how it can be used. And to help us accomplish this goal of how can it be used, we're going to use those 3 personas or the 3 people who will teach us how they could use this matrix or screener. I might use those words interchangeably. I'll explain why in a moment. But for right now, if I say matrix, screener, anything like that, I'm referring to the S&P 500 screener. It kind of has 2 purposes. Again, more on that in a bit. But these 3 people all are coming here for a different reason. Their goals are different. Their knowledge coming into it is different, and how they will use this tool is different. The goal of me showing these is not to show you these are the only ways to use it. My goal in showing you these is to hope that at least one of them makes you say, oh, I could use it for that. This is how it could help me invest. That is the goal from today's webinar. So let's get into it, shall we? Before we get into the actual screener, just because it's kind of unrelated, but also related, I want to talk about our three investors. We have Juan, Mary, and Carl. Juan is a brand new investor. He's just recently started investing and has learned the basics of what a stock is, what the S&P 500 index is, but 500 companies is overwhelming to say the least. I don't know about you, when I go to the grocery store and there's 3 different options for candy bars, I get a little paralysis by analysis. I start trying to figure out, all right, which one sounds the best? Which one has the least calories? Which one has the most calories? Whatever you're looking for that day. Trying to make a decision between 3 things is hard enough. Imagine 500. So for Juan, his goal is he wants to start learning, he wants to start investing, but he's overwhelmed. 500 companies is too many. He needs help to find 1 or 2 companies that he should consider buying. For Mary, she's been in the game a little bit longer. She's been investing for a little while, understands the basics of investing, is actively trading stocks, but wants to start getting a little bit more involved in her investing. She's not looking for the buy it and hold it for a while kind of investing. She's maybe investing regularly, wants to rebalance her portfolio often, and is also doing a little bit of research into other people's watch lists, into market sectors, and into technical analysis. The screener, after all, is based entirely in technical analysis. So, technical analysis, if that is a focus for you, this is a great tool. The last person, Carl. He's our resident expert investor, and his goal here is not to learn more about investing. He is already actively investing. He is trading derivatives such as options. He is either day trading or trading very frequently and is looking for something to save him time. He already knows what he's looking for. He wants something to save him time. The screener helps all 3 of these people. Hello, Sergio. Good to see you. So now, let's cover the basics of what the screener is. The S&P 500 screener, in my opinion, and hopefully in yours as well, is the easiest way to compare the S&P 500 companies against each other. To do this, we utilize a type of chart called point and figure. If you are unfamiliar with point and figure, don't worry. If you want to learn more about point and figure, we have a free Back to Basics course on our website, learn.sectorsmadesimple.com, that teaches that subject in a lot of detail. The link will be down in the resources if you're watching this recorded. And if you don't know anything about point and figure, don't worry. We'll break it down and explain how you don't need to think about point and figure to still use the tool. And what we do with point and figure, though, is important because point and figure makes it very easy to see in a relative strength chart who is winning short-term and long-term. Just so that we all know just enough to get us through today's webinar, point and figure looks like a really chaotic game of tic-tac-toe. What we can do is we can compare 2 different securities against each other. In this case, we'll do SPY versus technology, XLK. And what it does is it gives us a chart kind of like this. Columns of O's are going down. We don't want that. If a column of O's is occurring, that means that SPY is currently weaker than technology. Thing on the left, what we're comparing. Thing on the right, what we're comparing it to. The second thing, first thing we get is their short-term strength, which is the column of X's or O's. The buy signal, the long-term signal, is if we are above or below our most recent resistance or support barrier. Again, if you're not familiar with technical analysis and you're not familiar with support and resistance, don't worry, we handle all of that for you. Again, my goal here is just giving you enough so you can really understand what's going on. So in this case, our most recent support barrier is right down here at $296. Our most recent resistance barrier was up here at $312, which we did break through. So short term, we can say SPY is weaker than technology. Long term, we can say that SPY is stronger than technology. That's all we need to think about. So when we find these short and long-term winners and losers, what we can do is compare each of these companies. So we compare Apple against Tesla, Apple against AMD, Apple against Microsoft, Apple against Meta, everyone. We compare Apple against every other company in the S&P 500. For every one of those charts, we look to see, is it a thumbs up or thumbs down for short-term and long-term strength? Column of X's, short-term, thumbs up. Column or buy signal, so a resistance barrier breakout, long-term thumbs up. And we just count the number of thumbs up that we have for each of those charts. If you're thinking the same way I'm thinking, each company, we need 499 charts for it. Can't compare it against itself. So one company against 499 of the other S&P 500 companies. We count up the number of thumbs up for both short-term strength, which we call X count, and a long-term strength, which we call positive trend. Now again, if math is your thing, you're probably starting to put together, if we have 499 charts per stock, and we have 500 stocks, that means that you're going to need 249,500 charts. Now you're starting to see why I was saying that this is territory that not many companies or investors have really explored. Because to make this, and we make this every single day, every trading day, after every trading day, we go through and we calculate 249,500 point and figure relative strength charts so that we can accurately say who the strongest and weakest companies in the S&P 500 are by comparing them against every other company in the S&P 500. If you're familiar with sports or any sort of competitive game, you'll be familiar with the term round robin. We create a round robin out of the S&P 500, grading them on their short-term and long-term strength. To make it easy so you're not staring at 500 or 249,500 data points, what we do is we just add up all of the positives. So all of the X counts and all of the breakouts. And that gives us the relative strength scores. In addition, if you are familiar with point and figure or you start learning the basics of point and figure, because again, something we utilize quite a bit here at Sectors Made Simple is point and figure. The first part of what I've described is what we call the matrix. It has been our main tool that we have offered for the past 2 years, and it looks a little something like this. Instead of 500 S&P 500 companies, we look at 11 different market sectors represented by the State Street Spider ETFs and their ETF offering for the S&P SPY. Every day we compare all 12 of these ETFs against each other. You get this really cool looking colored plot that gives you all of those short and long-term indicators, and then we add them all up on the left table. So if I ever say matrix, this is why. This was what started the whole S&P 500 project. But we wanted to make it be a screener as much as it is a matrix. So in addition to those relative strength scores for the S&P, we also provide you a little bit of information on their P&F chart, their point and figure chart for that stock. That information includes their current column, so their short-term direction, whether it be X's going up or O's going down, and their breakout or breakdown. So is their most recent barrier breakout above a resistance barrier or below a support barrier? If again, all of that is not your thing, don't worry, it's color coded. So with that said, let's go and take a look at the screener. On the Sectors Made Simple dashboard, when you first open it up, this is what you will see. Over on the left, we have the button for the S&P 500 screener. Here, you will see the S&P 500 screener. On the far left, we have all of the ticker symbols for all of the S&P 500 companies. We have their long-term strength represented by positive trend, their short-term strength represented by X count, and their total, which is the positive plus the X count. In addition, to add in that screener part, we have some filters. We have the sector, so based on the GICS 11 sectors, which sector does that company belong to? And here we get to the color-coded part, all right? Again, I like the colors. They make it really easy. Green means it's short-term positive. Green here means that it's currently on a point and figure buy signal. Red means it's going down short-term or is in a sell signal. Now, what good would a screener be if you can't screen for it? So in addition to all of this, what we offer is the ability to filter by many of these different choices. You can filter by ticker to search for specific companies. So maybe you're interested in big tech companies. So you can do Apple, Microsoft, NVIDIA, AMD, so on. And you can create a list of only the companies that you're interested in. You could also filter by sector. So maybe you only care about companies that are in technology or technology and discretionary. You can filter by any number of sectors. And yes, lastly, you can filter by buy or sell signals. So if you only want to see companies on buy signals, you can do that with either the double top or triple top breakout tables. That's the big chunk of it. Again, below all of this is 249,500 charts. This is updated every single day. So we can go to the one from yesterday. They do take a little bit to run, so don't expect it the minute the market closes. But the day after, by the day after, they're always available. So here's the one from yesterday. You can sort to see the companies that have the highest overall long-term strength, the highest long-term strength, the highest short-term strength, and the highest overall strength. The last thing I want to show you, and again, if this doesn't make entire sense right now, don't worry. This information is there because some people want it. Many people are interested in different ways of looking at this data, so we want to provide that for you. This relative strength information right now is the totals. How many of their tables, or how many of their charts out of 499 are in columns of X's for X count, and then buy signals for positive trend. The reason we call them positive trend, you can't buy or sell relative strength. It doesn't make sense. So instead of calling it a buy signal or a sell signal, we call it positive trend. And the reason that we don't say short-term and long-term strength here those two words mean something different to everyone. Short-term and long-term strength are incredibly relative. Go figure, relative strength. But there is not a rule to say short-term is exactly this long to that long, or that long to that long. And we don't want to tell you it is this. It's not right. So instead, we do use the point and figure terms. X count, so columns of X's or O's, and then instead of buy or sell signals, we list positive and negative trend. Now, again, all of these numbers are out of 499 for positive trend, 499 for X count, and 998 for total. Another way you can look at this, instead of just looking at the counts, we can look at the percentage. So it takes all of those big numbers and puts them into context. So in this case, we know BBWI, 99.8% of its charts are in a column of X's. 90.6% of its charts are in a long-term positive trend. 95% overall. Maybe again, the numbers are not what you're interested. You just want to know who's winning. What is first place? We do that too. So you can get the rank for each of these companies. So you can see that its rank is first. Because again, if you look at something like this, 90.6, great. What does that mean? What is first? Well, for that, we can look at rank. Rank gives us the actual number of you are in first place, you are in second place, you are in third place, so on. And then finally, we have percentile, which takes the rank and says, what percent of other companies are you beating? So something that is 100% is beating 100% of the other companies. So in this case, we know BBWI, even though their percentage for positive trend is only 90.6, they are ranked 5th for positive trend, which turns into 99.2 percentile. Again, I don't expect every single person is going to be interested in every single one of these, but the goal is that one of them or more than one of them makes sense to you and that you would want to use. If you ever get confused or you want a little refresher on what these 4 different things are, we wrote a handy-dandy little guide for you to review what all 4 of those different metrics are. Again, our goal was not to overwhelm you here. Our goal was not to put all of the information in one table and say, figure it out. It was to give you the information you want, and that's it. And give you the option to see different things. Now, this, again, is the majority of the S&P 500 screener. But that's not all that's new today. Because we've also taken that screener and used it to create some pretty incredibly powerful tables. The first one I want to mention is momentum. Momentum is our way of seeing changes in that screener over time. Because seeing who the leader is today is useful. But if you're investing actively, you don't want to know who the leader is today. That's great. You want to know who is gaining ground, who has gained the most ground in whatever period of time that might be. So for that, again, that screener is a picture of yesterday's market. It is not historical. It doesn't average 1-year returns like other relative strength calculations out there. It is a picture in time. It takes everyone in one picture and says, who is the leader today? And that leadership is different than what it was a day before, a week before, 2 weeks before. So to show you those changes over time, we have the momentum table that will list out the positive and negative changes for all of those companies, so you can see which ones have gained or lost the most strength in the past period. The periods that we offer are 1 day, 1 week, 2 weeks, and 1 month ago. And if we take a look, down here is where you will find that information. So in this case, we are looking at the 2-week momentum period. So we are comparing the matrix from 11:17 to the matrix from 11:3. And in this case, we can see BBWI has gained 713 total count. Google has gained 601 or 590, depending on if you're looking at the Google or Goog shares. You can sort by X count, you can sort by positive trend, you can filter by sector, and you can still filter by company. And all 4 of those different options, count, percentage, rank, percentile, are supported on this momentum table. Now, sector averages. This, to me, if I have to say, we created a new trail, did something no one else has done, and have shown something incredible. The screener is amazing. It is incredibly valuable. The sector averages is where some real new ground has been broken. This is, in my opinion, undoubtedly the best way to see which sectors in the market are leaders at any given moment. Now, that's a big claim, but let me back that up with some different reasons for that. First, what makes this better than the S&P 500 matrix that we have? What makes this better than bullish percent that you get on stock charts? What makes this better than all of the other things that already are out there? Well, a couple of reasons. Sector averages within our screener are all of these things, and I'll explain why they're important. First is that they are equal weighted. If you're investing in an ETF, you care about the strength of that ETF. That's what, after all, you're investing in. So if you're buying an ETF, you're not buying equal parts of all of these different companies. You're buying a weighted portfolio. It's meant to track the performance of that sector. So if there's the really big companies, and they're not doing much, the little guys are shooting to the moon, you might not really notice it. So these sector averages are equal weighted. The smallest company and the largest company all count for 499 charts. The second reason is that it's point in time. Again, there are a number of relative strength calculators out there that try and say, oh, we use a exponential moving average of 1-year returns to find relative strength. That's great. That doesn't tell me who the leader is today. That doesn't let me compare one company against another in terms of their performance over the last week. So matrices and the screener are point in time. They are telling you in today's market, not yesterday's, not the day before's, today. Okay, I guess actually, if we're talking about it right now on Friday afternoon, we are talking about the one from yesterday. Bear with me. We're not talking about their 1 week, 1 month, or 1 year exponential returns. Relative strength charts are point in time. Our data shows you up-to-date relative strength information. The third one is that they are comparable. Equal weight is great, but you know what? There are equal weighted ETFs. Why can't we just use those? Well, those equal weighted ETFs have different numbers of companies inside of them. They are different prices. They are not graded on the exact same scale as each other. In this case, they are. Everything is graded on a 0 to 499 for positive and X counts, and 998 for total. So you can see an actual number to say how far ahead one sector is compared to another. Arnulfo, Jonathan, can we get the leading sector and check the best companies in that sector? Oh, you bet. Hold on to that question. I will do exactly that in a couple of minutes here. And the last and probably most important one to me is that all of this data is in context. This is not some other website that uses different sector names or different little components that are unique to them. We use GICS sectors, up-to-date data, known charting methods, so we're not creating our unique charting. I can tell you exactly how we do this. I have told you. We use point and figure relative strength, add up the X counts, add up the buy signals. That's that. So these sector averages are in context because now everything is relative strength. You can put that knowledge or finding the best sector, you can put that immediately back into the screener using that sector's name to find the leading companies in that sector. Before we get into how this screener can be used by our 3 example investors, how about we use an actual investor? There was a question. Someone was asking, how can I get the leading sector to then find the best companies in that sector? Yes. Let me show you how long it would take to do that. You open up the screener, you scroll down, and if you're just asking what the leading sector is, in my opinion, total count is what you would be looking at. If you're looking at momentum, you care more about short term. If you're looking at overall, you're looking at total. In this case, it would be consumer defensive because the average positive trend score in that sector is 207. The average X count is 301, and the average overall, 509.3. We can compare that in context to every other sector, so we can see exactly how far above or below consumer defensive is compared to other sectors. Kike, can this tool help us do options by searching through the ranks and percentiles? Hey, you and Carl would be really, really good friends. Carl's got some stuff to say about that. So yes, it can do that. But for Arnulfo, let me show you that. So we might say consumer defensive is the leading sector. All right, go up here, plug in consumer defensive. Now you can filter away. If you want to just find the best companies in that sector, done. Just sort by total count. There is your list of all of the companies ranked by overall strength in that sector. Maybe you're like Juan, who we'll talk about in a minute, and you care more about, yeah, I want the strongest company in the strongest sector, but I don't want to wait for it to go on a buy signal. I don't actively look at my investments. I want something already on a buy signal. All right. You can either go here and filter by breakout signals, or you can look at, we're already sorted by overall score, the total count. So find the one that's green. You don't need to know what a double top or triple top breakout is. Green values are buy signals. Point and figure buy signals, not my opinion buy signals. Current column, green means X's. It's going up. That is how easy that can be. So the answer, how long would it take to find that? Scroll down, sort by positive, or sort by total count, consumer defensive. Plug that in here, sort by total count, there's your answer. If you're active and you want to find something that's not yet on a buy signal, look for the things that are in a column of X's, not yet on a signal. If you're the see it, set it, forget it kind of investor, you want something that's already on a buy signal, cool. find the top one. It's already sorted by overall strength. Find one that's in a column of X's and a by count. Elizabeth, I'm not seeing the same screen that you have. For example, if I chose consumer defensive, it shows no rows. Give it a couple of seconds. Again, this is a ton of data, so it might be a little slow to load. Give it a couple of seconds. If it doesn't load in like, I'd say 15, 20 seconds, shoot me an email with whatever your screen is looking like. The other thing it might be is because this update is so new, your computer might be a little confused because it's still thinking. It's like you reorganized the house and you now have a guest walk in and they try and go to where the couch usually is. Now the couch is upstairs. Your computer can get a little confused where everything is because it's not how it remembers it. So it might take a little bit of time for your computer to adjust to that. But again, if you're still having trouble, shoot me an email and I'm more than happy to help your computer remember where everything is, to put it in another term. All right, now we talked Arnulfo, let's talk Juan. Because Juan wants something very similar out of his investing. Juan is brand new to investing. He doesn't know what point and figure is. He doesn't care what point and figure is. All he wants to know is, can he use the screener to find companies that are on buy signals, that are the strongest companies, and are in the strongest sectors? Well, again, Juan, Arnulfo, you'd be great friends because the screener can do that very, very simply. You go filter by the sectors. You can take the top sector. In this example, you can take the top 3 sectors and go to the current table and find the ones that are on buy signals. Let's go and see how long it would take him. If all he wanted was the top 1, there you go. Let's go top 3 just to spice things up a little bit. Consumer defensive, which is staples. Consumer cyclical, which is discretionary and technology. We can go here, cyclical, defensive, technology. Ta-da! Sort by total count. These are the overall strongest sectors, or overall strongest companies in the overall strongest 3 sectors. We want something that's in a current column of X's and is on a breakout. Cool, there you go, BBWI. You're done. The cool thing about all of this, let's go back in time 1 month. What's up? Is there a question I missed? Regina. Ay, gracias. Ay, gracias. Es un placer para conocer que estás contento con todo. Regina's saying that I'm a new subscriber, and if you're still not convinced, it's very worth it. My job today here is not to be a salesman. My job here today is just to show everyone, subscribers and non-subscribers, why this tool is great. That's just my job. I hope that the tool can sell itself. But thank you so much. That is such a great compliment. All right, let's go back in time 1 month and let's see what he could have invested in. Again, he's not actively investing. He's buying one thing, setting his trailing stop on it, and coming back in a month. Okay. Top 3 sectors overall: healthcare, industrials, discretionary, or cyclical. Those were the 3: healthcare, industrials, cyclical. RCL. That would have been his choice. How has RCL done over the last month? I hope really well, otherwise this is going to be really awkward. It did all right. Just all right. This, again, I did one example here. Can I guarantee you're going to make 25% profit on every investment? No. I can't promise you anything. What I can promise you is that this data works. This is information and methods that we have been using for 2 years, and we have back tested with the matrix. And what we're trying to do here is explore how this can apply to the S&P 500. Do I have concrete strategies to show you right now? No. But this tool is brand new to us as it is to you. We are working on building simple to follow strategies to help people like Juan that, again, just want to get their foot in the door. We're working on more ways for people like Juan to be able to invest using the screener, and I will never tell you a strategy without some data to back it up. What I just showed was one example, not a promise of 25% every month, but it's an example of how this tool can be used and to show that relative strength is a well-proven method for sector rotation and, in many cases, for stocks as well. Melly, can you show us XLV 3 months and 1 week if you could? We can't do 3 months. Are you saying from 3 months ago if you had invested in a healthcare company? Because XLV is healthcare. And from the matrix. Okay. So are you saying to look at the 3 months ago matrix like this? So comparing the matrix from yesterday to the matrix from 3 months ago. So in that case, healthcare has the largest change, short term of 4, but the highest overall change was materials. Again, if what I just said was completely different language, this is 3 months and 1 week. Ooh, I like that. All right, for that we use custom momentum. So we're going to go three months and 1 week, which would be August 10th. And click on X count. Let's do that. That is the momentum compared. That is the sector relative strength from yesterday, Thursday, November 17th, compared to August 10th, 3 months and 1 week ago. This part is all the matrix. All of this stuff is also included with the subscription. You get the screener, you get all of this, and all of our tools, over 100 hours of webinars, to show you how to use tools like this. There are very simple to use strategies that use this. Those strategies have consistently outperformed the S&P 500 for the past 3 years. I can say that with confidence. So this kind of stuff we've proven to work with sector rotation. Now we're exploring, because we have the ability to create a relative strength matrix for 500 companies, we're exploring what it can be used for in that context as well. All right. So for Juan, the decision was pretty easy. It took him 2 minutes to find 3 different sectors and to filter down that list to find a company on a buy signal in a current positive trend and the strongest overall company with those 2 things. How about Mary? What does Mary want? For Mary, she's already investing. She knows what she's doing. She follows a couple websites, and some of those websites give her watch lists. They're top 10 stocks to watch for the next month. And she wants to learn a little bit more. You know, their lists are based on fundamentals. Their lists are based on strong earnings, whatever it might be. But she wants to learn more about technical analysis. Forget the fundamentals, forget their EPS. I want to know their price. I want to use their price to find the best one. Well, everything on the matrix, well, rather, everything on the S&P 500 screener, I told you I'd do it. Everything on the S&P 500 screener is based in technical analysis. Relative strength is technical analysis. It is a technical analysis comparison between 2 different securities. We do 249,500 of those, and we add them up. So it is addition of technical analysis. So this is right up her alley. What Mary wants to do, though, She doesn't want to just see, I want the leading companies in the leading sector. It's, I already have my watch list. Can I see what the strongest companies in that watch list are? She definitely can. Using the filter by ticker option. I'm going to also, because there is a little bit of lag on the stream, if you're here live with us right now, throw out your favorite company in the S&P 500 and we'll throw those all in and see which one the strongest company is. And go. While you guys are typing that, I'll continue with this slide. What Mary wants is to have a YouTube chat that will scream out a bunch of tickers so that she can plug them into the screener and see what the highest overall strength stock is. She can then sort that list based on what she cares about. Is she buying short term, actively watching those investments? Maybe she cares more about X count. Maybe it's a long-term kind of thing, more positive trend. Or you just want something well-rounded. And again, if I have to say what is the strongest overall, I'm going to look at total count. So we're going to focus on total count as well. Again, Mary is the kind of person that wants to learn more. She understands the basics of how to use this screener, but there's a lot of parts to it that I can't cover in this introduction. So, and a lot of this is based in point and figure and charting analysis. We have lots of resources and a yowling cat that can offer you the ability to learn more about relative strength, more about point and figure, and all of that information is offered on our Learn site. This Learn site offers courses of all of our webinars organized to help you learn more about specific topics. Many of these courses are free to start watching, but the Back to Basics course in specific is 100% free. All you need is a free account with us. So if you're interested to learn more about why and how we use point and figure, relative strength, and whatnot, the Back to Basics series is 4 hours, and it is a great crash course into what Sectors Made Simple is based on. Now, let's go and plug all of those companies in to the screener. We'll go back to the matrix from today, and we will take a look at what we've got. All right, going down your companies, filter by ticker. All right, Amazon, Nvidia, Target. PanW is not in the S&P. Palo is not. Palo Alto, I'm pretty sure, is a location. XLU is an ETF. This only includes the companies in the S&P, sadly. Alibaba is not in the S&P. Apple is. ExxonMobil. I'm going to throw a couple of my favorites in there, too. Let's add Tesla. Let's add Twitter. Oh, wait. Huh. We'll add Google. We'll add Meta. We have NVIDIA. Let's add AMD. All right, cool. There are those 10 companies, 9 companies. It's a good thing I have a calculator because I'm bad at math. Those are the 9 companies that we just talked about. Now we can sort them. Positive trend, X count, total count. If you only want to see the ones that are on buy signals, you can sort by breakout. If you only want to see the ones on columns of X's, you can sort by column. And pretty easily, you can find the company that is the strongest, that is both on a buy signal and in a breakout. In that case, it would be ExxonMobil. Is it the strongest overall? No. In fact, if we use rank, we'll find that ExxonMobil is ranked 222 overall. So it is beating 55.7% of other companies. Okay, that's good to know. This gives you context. You can get as detailed and in-depth with this data as you want. But the point is that the information is simple to start with, but how far you go with it is incredibly deep. This is meant to be a whole in-depth analysis tool. It's Great for people like Juan that just want a very simple, I have a simple question, I want a simple answer. For people like Mary and Carl that want to just start off simple but get a little bit more involved. She wants to continue learning. There's so much to learn in how to use this tool, and fun for me and fun for you as well. We're still learning new ways to use this tool as well. This did not exist before we did it. We did not copy this from someone else and say, oh, they're doing it, why don't we do it too? To my knowledge, this has never been done before. Our ability to create charts quickly has enabled us to do something like this and offer 250,000 new charts every single day and bring it to you in a way that's easy to get started with, but the possibilities with are endless. Speaking of the higher end, endless side of things, let's talk about Carl. Carl, he knows what he's doing. He's been investing for a while. He's got a pretty nice portfolio, and he's actively investing. His concern is not in, I don't know how to find the best companies. His goal is, I'm already investing. I just want to save myself some time. Time is money, friend. I want to save some time, which also means I want to save some money. He might already have subscriptions to other charting websites and other stock screeners, and he's just trying to look to slim down how many subscriptions he has. In addition to the matrix, to custom matrices and back testing and all that, he gets the S&P 500 screener, which can save him time in a number of ways. First, much like Mary and Juan, he can find the strongest overall sector and then add this as a unique filter to his current stock selection process. He might not get his list of companies from insert random website here. He knows what companies he's interested in, or he knows his process to find the right companies, and he just wants to know, what sector should I focus on? Or he's a swing trader. He's trading actively for derivatives like options that have high risk and high return. And what he wants out of this is a way to see what stocks are actively moving and are meaningfully moving, whether that be in the leading sector or not. He wants the ability to make his own decisions about what direction he goes, and he wants the tool to be able to go in that direction with him and support him every step of the way. For him, using the one-day momentum might be more his style. He can still filter based on his list of companies. He can also filter based on any other condition he's interested in, sector even. And he can find a short list of companies that he can trade or buy options for. Now, his knowledge might be a little outside of just the S&P 500, and that's great. In addition to the matrix, which is S&P ETFs, the screener, which is S&P 500 companies, we have what's called custom matrices. Custom matrices can be created from any list of publicly available common stock in the US market. This does have a limit of up to 7 different companies in a single matrix, but if you're interested in a matrix larger than that, email us. We can run that for you. So for him, his search might start with the screener. It might start with narrowing down his list to a couple of companies in the S&P. Then he already knows their strength in the S&P. He can plug those into a custom matrix, add in some companies outside of the S&P, or add in other benchmarks such as SPY or the S&P sector ETF he's interested in, a total market ETF, whatever it might be. We have tools and resources to support investors of all skill levels. Beginners who want a great place to start and want the decision-making process to be as simple as possible, we got steps for you. If you want to start learning more and you want to start getting more actively involved with your investing, the tool is great to help you out right now, and we have education and resources to help you get to where you want to be in terms of your skill level for investing. And if you already know what you're doing and you just want to save some time and money, We have plenty to offer you as well, regardless of if you're looking at ETFs, sectors, companies in the S&P, or a little of S&P, a little bit of NASDAQ, a little bit of NYSE. The options and possibilities here are endless. And just like Carl, we are always looking for new ways to take this information, find ways that we can use it to invest simpler, and then share those ways and methods with you all so that we can all benefit from these resources together. So, bringing all this back together, who is this screener for? It's for Juan, it's for Mary, it's for Carl, it's for everyone, and it's for you too. Our goal in releasing this tool is that it's for fresh investors, seasoned professionals, and everybody in between. If you want to come join us and learn, we have 2 webinars a week. Right now, all of our members' webinars are covering this material. We are covering new strategies and ways to use this screener every Tuesday. After we're done with that though, you'll find all of those webinars available on our resources site, learn.sectorsmadesimple.com. Then, again, if you don't care about that, you just want simple strategies to use, we've got some already. We're working on some new ones that use this screener. If you already know what you're doing, you just want the tools, great. The tools are there, they're ready to use, and we're always looking for feedback and more ways that these tools can help everyone, new, learning, and professionals alike. So it is our hope that this screener can help you invest simpler, regardless of who you are. So now, I do have to get into the sales pitch just a little bit. How can I get the screener? Well, we offer subscriptions for Sectors Made Simple. Those subscriptions give you access to the screener, but it also gives you access to our New York Stock Exchange bullish percent indices, our custom matrices, the sector ETF matrix, and over 100 hours of members-only educational webinars, and over 30 more hours. I think at this point we're almost up to 50 hours of Spanish language webinars as well. All of this is included with a subscription, and we have 3, 6, and 12-month subscription options available that you can learn about more on our site, sectorsmadesimple.com. In addition, what you see today might change for the better because we will be working on updates to this screener, from new strategies to additional technical analysis indicators such as trend lines to back testing. All of these updates will be included with your Sectors Made Simple subscription. So if you are currently a Sectors Made Simple subscriber, the tool is already on the dashboard. It is ready for you to go. If you are not yet a Sectors Made Simple subscriber and you are interested in purchasing a subscription, head on over to our website, sectorsmadesimple.com, to learn more, see pricing options, and start investing simpler with us. If you have any questions, here, I'll save that part for a second here. Let's quickly review what we've talked about today. The screener is available, and it is included with any Sectors Made Simple subscription. This tool will help investors of any skill level, that means you, to make more informed decisions, save time, and provide educational resources to help you find new and interesting ways to use our information. Again, if you're interested in purchasing a subscription, head on over to our website, sectorsmadesimple.com, to check out pricing options and to purchase a subscription today. Purchasing a subscription gives you instant access to all of the things I mentioned before, and yes, the S&P 500 screener too. And if you have any questions, need any help, have feedback, or just want to send us a love letter, you can email us at support@sectorsmadesimple.com. We don't have some outsourced support center. The support is me, my wife, and sometimes our cat, though she's not that helpful. She usually just sleeps on the job. But again, that support email is not a random support team. That gets directly to us. So we love to hear from you all how we help you to invest simpler. So for me, the entire Sectors Made Simple team, actually, quick special thank you to Nate. Nate is our developer and is the only reason why we have the tools we have today. He has built everything that is on the dashboard. He has built everything that is on the Learn site. We are incredibly grateful to him that this tool is here. When we originally were developing this tool, we said, all right, it'll be a weekly thing. 250,000 charts is a lot to run. We can only run it once a week. Nate, without even talking to any of us, just went coding for a week, came back, and he's like, all right, well, I didn't want it to be weekly. I wanted it to be more useful. I wanted to use it daily, so I made it daily now. So we have him to thank for everything that we have to offer you, and it is truly thanks to him that we are able to have this webinar today and offer this tool to you. So, from all of us, Nate, Cleo, my mom, Julie Stav, Kira, and myself, thank you all so much for joining us today. I hope that this S&P screener helps you to invest simpler, and I hope to see you all back here at Sectors Made Simple very, very soon. Take care, everyone. Have a great weekend, and if I don't see you before, have a great Thanksgiving as well. Take care.